At PayU, we've decided to go on a journey to redefine the fintech space. This is why we're traveling around the world, crossing borders to meet experts, leaders, and innovators. People who we admire, people who are writing our alphabet. And by that, I mean the Fintech Alphabet.
So let's start. So guys, I think I think you are super well known, right, in the fintech scene. Both of you, founders, very successful companies. Both of you operating more or less, in the same segment of the industry, and both of you also with the same passion, right, for the business you're building, which is not just make it big numbers, etc. It's starting actually, with making a big difference for the consumers you're serving, be it in Africa, be it in India or the Philippines. So it's starting from this. So maybe as a way of introduction, if I can ask, is what brought you really to build, Azimo or Remitly? What was this initial passion, that brought you into that one?
A lot of the time you're trying to work out, where there's a market and where there's a customer pain point. And it's very easy to, when you start looking for them, you start seeing them everywhere. I came across remittances way back in 2005 when I set up my first business in the sector. And it just struck me as, incredibly underserved, incredibly expensive. And the people who are making all the money seem to be pretty incompetent. And I think the sort of, if people who are pretty incompetent giving poor customer service are making a lot of money, then, there's definitely an opportunity. And so we set up Small World Financial Services, which was actually way before, this business went digital, this sector went digital, was a buy and build in the space. And we started buying up all the sort of smaller scale companies to try and make something that could compete effectively with Western Union and MoneyGram and like the traditional guys. And along the way, I found out that I loved it, and I loved it for a bunch of reasons. I think there's a real purpose to doing what we do. I think digital and efficiency can serve people, with a dramatically different customer experience. And if I have to have my grandchildren, as I will one day, I hope, on my knee and tell them, what I did in the great digitization times, I think the making it cheaper to send money around the world is probably a reasonably worthwhile thing to do. The other great thing is that, the community that sits around this sector is fantastic. Both the customers and who are working exceptionally hard and trying to make things better for their loved ones all over the world. That's a great customer audience to be serving. That's how I came across it. Azimo was really a reimagination of my last business and trying to take a clean piece of paper and saying, if you can do it for offline, how do you do it digitally? And that's really where it came from. How about you, Matt?
Yeah, thanks, Michael. And yeah, Laurent, thanks for organizing this. It's fun to connect with both of you guys. So for me, even though I'm from Boise, Idaho, which is a more rural place,
Where is that?
It would be like Midlands in the UK potentially. My parents really valued travel growing up, so I've been to close to 100 countries. Lived and worked on 3 continents, and one theme, throughout all my travels, but especially when I was living in Kenya, and I was working for Barclays Bank, I was getting paid in British pounds, living in Kenyan shillings. Eventually, I had to get money back to US dollars. It was painful, expensive, all the things that you assume when you think of remittances, but it was even more painful for a lot of my Kenyan friends who really relied on remittances for their livelihood. A few $100, as everyone knows, probably listening to this, goes an incredibly long way in the countries where our customers send money to. And so a lot of my Kenyan friends relied on remittances from their families in Europe or North America. And so that, combined with M-Pesa in Kenya and seeing how that was transforming domestic financial services, seemed like the right time. Western Union's been around 160 years. A lot of building the business is about doing it at the right time. And the second is it was a business that, like you said, Michael, when you're talking to your grandkids, like it's enormously impactful because customers in this industry have been underserved. Customers in this industry, and when I moved back to the U.S. and started the business, I got to know the senders who are ultimately our customers a lot better. The sacrifices they make to be away from their families so they can build a better life for themselves and their families back home. Those are customers I want to wake up and serve every day. Those are customers who it just creates so much more meaning. And so that's why I started the business, and it's been an amazing 9 years.
Staying on the customers, because I mean, no doubt, that the service that both of you provide, and also the type of customers, that you serve, right? There's a lot of talks right now about suddenly we have discovered who are these essential workers, right? The key workers of the economy. Suddenly, people pay attention to the guy delivering the food, the nurse, at the NHS coming from Romania. I mean, all of this, right? A lot of them are your customers. So at the same time, there is this huge shift to digital. And a lot of companies right now, are enjoying a big moment, right, with this shift to digital, e-commerce players with deliveries and so on. I guess that's the same for you. Just wanted to understand, what's the immediate impact, of this lockdown, which is, global, in nature. Has it been affecting your business?
Yeah, I can go first on that one, Michael, and then turn it over to you. I think it's easy to forget that at least our numbers, Michael, I'd love to hear your perspective in a minute, but 70+% of remittances are still sent offline via, Western Union or MoneyGram type locations, which is pretty amazing when you take a step back and think about it, right? Yeah. And so what's happening right now is that people either don't feel comfortable or can't get to those locations. And that's driving a lot of people to say, hey, maybe I'll test out this, digital money transmitter for the first time, which is scary for customers, right? I mean, they know the person at the local corner store. They might not, know who's behind a digital platform. And it takes a lot of trust. And so that first time usage, I think, is being accelerated because people can or don't feel comfortable getting to a physical cash location. So for us, from February to March, our new customer growth grew by 100% month on month. From February to March, our overall transactions grew 40% month on month, and those trends have continued into April and May. We talked about March publicly right when that happened, but April and May have been similarly strong. So I think that remittances are going to look very different on the other side of the crisis, and that's driven by the fact that people need digital solutions, and it's driven by the fact that, like you said, it's an essential solution. It goes a long way right now for medical expenses, basic needs, and customers make it a priority to get money home.
Michael, do you see the same on your side?
Yeah, I mean, we had a couple of extra impacts, I guess. So we're about 100% up on new customer numbers for sure. So we're seeing that surge, and people are, there's a reason that people don't want to go out. They don't want to handle cash. In certain European markets, actually, it took a while for governments to say that money transmission was an essential service. Actually, some of these shops couldn't even open. And we and the rest of the industry kind of pushed the politicians to change that stance where appropriate, because this really is an essential service. If you look at where people are sending the money for, it's kind of like it's education, it's healthcare, and it's basic food and groceries. So it really is essential. We actually saw a bit of a weakening in March, not in the number of transactions, and actually transaction numbers are way up across the board and have been month over month. But actually the value went down a lot. And that was largely because there was a huge surge in the value of the US dollar. And you had to go back to 1985, when I was 10 years old, to find a point at which the pound had been weaker against the US dollar. And what that meant to a lot of our customers who are sending to emerging markets, developing markets, those currencies are pinned and they track the dollar quite tightly. So actually that meant we had a couple of something. I won't swear on your podcast in case people's ears are going to burn. There was a couple of weeks where we were like, this could be bad. The euro was way down against the dollar. Everyone globally was seeking out dollars. And you had to pay the treasury for the benefit of holding dollars with them for the next 30 years. So that was tough the first couple of weeks of the crisis. And then we saw this sort of converse trend of many more users, many more customers. And then actually this is pretty sad for the economies involved. There's been quite a strong devaluation of some of the emerging market currencies that in places that we send to. So places like Nigeria, places like Colombia, the Philippines peso has been performing particularly badly. It's not a big corridor for us, but knowing the industry, the Mexican peso is through the floor, and that's kind of like bad news for Mexico, but very good news for people who are sending money home there, because those dollars, each dollar goes a little bit further. I think interestingly, that's just the immediate impact. I think longer term, we're seeing a lot of people hit a bit of distress. I think Laurent, you said to me, this is set FinTech back 10 years. I hope that's not true, but there's definitely some of the smaller guys or some of the more traditional guys who don't have a digital offering. There's going to be a bit of an impact there. So we're kind of waiting to see what's going to happen in terms of pricing, market structure, all of that kind of stuff. And then the number one question in my mind is, we haven't really seen it yet. Our customers seem to have the same amount of disposable income to send home as they did previously. And of course, we talk to them, we ask them both sort of formally and informally all the time. But it feels like there's going to be an economic impact that's going to come pretty soon. And I think that's going to be, disproportionately potentially felt by our customers, I should say.
Is that what you think, led the World Bank, to issue this report saying, remittances worldwide are going to go down by 20%. So, it was very, very gloomy, right? So on one hand, you see really the surge, also because there's no better alternative right now than to go digital, for sure. But at the same time, now we are about, to enter the recession, which means people losing their job, less income, and even if it's an essential, service, and even if the money you send back home is really, because people are dependent on that, do you think they were referring really to the impact to the real economy, when they came up with these very gloomy predictions of 20% down on volumes? I'm trying to make sense, of the two things.
Well, so I never argue with anyone because I'm an incredibly reasonable man, but I had a debate with Dilip as to what was driving that model.
Yeah.
But you can see his point, because the UK government and the Bank of England have just predicted the worst recession for, I kid you not, 300 years. 300. If it's more than 20 years, I don't really care. But this is it's absolutely unprecedented, the economic impact that we're seeing at the moment. So that is, and you plug those numbers in, and that gives you a very bearish outlook for pretty much everything. And of course, migrant workers tend to be more leveraged to, I guess, the gig economy, jobs that can easily, go even in Europe. And I think the impact will be less in Europe because we have a more progressive view on the role of the state in society. We tend to do a little bit more on protecting people's incomes from, the economic cycle. So, Social Security is more developed here than it is in the States, certainly than somewhere than the GCC. But I can kind of see where he came up with those numbers. I think time will tell, because I think actually if you look at the last recession, peak to trough was 6%. And that was a pretty deep economic recession. I don't think there was, I think it will be more than that, but 20% feels very bearish to me. I think Citibank put it at 15%, but and in some ways, who cares? It's going to be bad for everyone. I think the thing that gives me hope is, the kind of people who are sending are hustlers. They're the brightest and best of their particular generation. They're the guys and girls who decided to get off their backsides and get on a plane and try and make a better life for themselves. I have quite a lot of faith that they will find a way to, make this crisis work for them and continue to be able to send. But yeah, I mean, there's no viewpoint on this that you can say it's not going to be a massive economic impact.
And you, Matt, what's your take on this one? What do you see in the US, where we've seen, the numbers of unemployed people, going through the roof in a very short amount of times? What's your take on this?
Yeah, I think it's undoubtable there'll be some drop. I think that in the U.S. context, it won't be as deep as places where migration is less permanent. I think that was one thing. Dilip wrote another paper after the 2008-2009 recession where one of the factors that correlated with higher drops were places where migration was less permanent, meaning places like the Middle East.
Yeah.
And if combined with oil prices being down and the fact if you lose your job there, like although travel restrictions are a little bit unique in this instance, you're certainly not staying there and working over the long term. And so I think that in markets like both Europe and North America, you'll see less of a drop than markets like the Middle East where migration is less permanent. I also totally agree with what Michael said. Like, our customers are amazing. Michael, during our last catch up, you said something that stuck with me, which is like, you've been in this industry much longer than I have, and you said you've learned never to bet against our customers. And it's so true. I mean, our customers are some of the most resilient, amazing individuals, and this is essential to get money home. And so there will be a drop. Will it be 20%? I don't think that much. Will it be 10 plus or minus? That would be my guess. And I think it'll also come in the form of not people not sending money home, but more in how much people are sending money.
I personally fear, that a lot of the different startups won't make it through, and that basically, we could be set back a few years because of this. Certainly, in the lending space, a bit also, in the digital banking space, etc. But I just wanted, to get your views on that, because you're very well plugged, in the founders community, and share a bit your views. Is it going to be a really tough period, for the fintech ecosystem? Are we going to recover from that?
I think it will be a tough time, and I think we will recover. I think that it'll be tough because there were too many companies out there raising without clear business models and therefore line of sight to profitability. I mean, maybe they had, we'll add lending, we'll add all these things, we'll expand to this geography, we'll get to this scale. But like, you put the number on paper, and there was really no clear actual line of sight to profitability. And I think those companies, given the state the capital markets are in, are going to have a hard time raising and continuing to grow. It's why you're seeing down rounds. It's why you're seeing cuts. Within remittances, I think it's better because there is a clear business model. You cut out a bunch of costs, you make it much more convenient, but it's not like we're banking on adding some lending or other product in order to get to profitability and in order to achieve a sustainable, very large business. So for the small remittance companies, I think that might be a challenge, but for the ones that have a certain scale and size, feeling better about those, feeling more skeptical about broader fintech. And I think it'll be a trough. We'll come out of it. There might be consolidation with bigger players taking more share. It's inevitable that fintech is a very large player in the ecosystem, but I think this probably does slow it down some.
Yeah, I mean, absolutely agree with that. I think, yes, it's going to be tough for companies. Companies are going to fail. People are going to have to, accept significantly lower valuations than they did previously. And, we're going to go back to a normal state of affairs where good companies with great management teams and a sensible business model get funded and everyone else doesn't. There's too much money chasing, ideas rather than real companies that have staying power. And at the end of the day, there is creative destruction in this industry. And it was a one-way bet to be a VC investor in fintech for a few years. And that's just not the way that life works. So I think the reckoning was going to happen. Whatever. I think it's happened much faster and much more painfully than potentially people would have envisaged. I like to take the American approach to these things, as thinking it's going to be tough, but it's going to be a learning experience. We're all going to come out of this having learned as much in the last 3 months and the next 6 months as we learned in the last 6 years, probably. It will probably set the industry back a couple of years, but just like you don't want to bet against migrants, you probably don't want to bet against fintech entrepreneurs. They're going to find some ways of getting rich and doing well through this crisis. Just look at in the UK, it's fascinating. All the all the neobanks and the platform lenders are getting into giving out government loans. I mean, they completely pivoted their business model from giving out their, peer-to-peer money to giving out government money in a matter of weeks. And they're now doing it hand over fist. So, there's definitely a flexibility there, which is probably going to act to their credit versus, the big banks and the sort of the lazy old fintech or financial services players who are a little bit slower to adapt.
I think I agree. It might have been, the peak fintech investor, moment. But I still believe when it comes to the consumer, it's just the beginning. And I think, the numbers you've said, you've announced, of consumers just now starting to use your service. I think it's just the beginning again, for true fintech to really, be mass adopted. But sure. One thing you said, Matt, really over the past 3-6 months, you've learned more than the past 6 years. What are the big changes you've had to make really to your business? Going through the crisis, the lockdown, and now that everybody is exiting the lockdown and entering a recession, but what are the big changes you've had to make?
I was thinking about this. I mean, there's personal changes, aren't there? And there's sort of business changes. And we're not expecting to massively pivot our business model on the basis, in fact, we're seeing the market come towards us, and it's incredibly gratifying. Having said, it's all going to go digital for the last 5 years. It finally seems to be doing that at pace. So that's great. I think there are a lot of personal changes and sort of ways of working changes that we're planning to make. And the first thing is, I'm incredibly proud and in awe actually of my team, who've literally gone from working in an office to working remotely in a heartbeat. The engineers tell me they're much happier to have no pesky humans interfering with them on a day-to-day basis. So they seem to be getting on great. But there's a lot of stress from being, trying to work really hard and execute on your goals as an organization, and as teams and as individuals remotely. And people are, people are doing that amazingly in the organization. I think we really have to think about, people and how we keep, things like mental health. It was just the end of UK Mental Health Awareness Week last week. How we keep people functioning at the right level, but healthy and, and sane in these difficult times. So we're spending a lot of time thinking about that. But I think going forward, we're all going to consider, just how much moving around we have to do in order to be effective. And that's probably pretty good for the environment. That's probably pretty good for our teams and for our families. So I think I wouldn't expect any huge changes in the business model. We're probably going to work more with financial wallet or sort of e-money solution providers, telcos. I think it's going to be a move away from cash. I don't think we're going to see a huge change in our business model, but our ways of working and the sort of nurturing of teams and talent and management. I think the big challenges actually are for us as, as managers and leaders in organizations, that we're the ones who are going to have to think about, how are we effective and how do we allow our people to be effective and how do we run our businesses? And that I think is actually, it's fascinating, but it's also going to be a big challenge.
Of course, we all had to deal with the immediate crisis and the lockdowns or working from home, which comes, I would say, easier to companies like ours, right? Where everybody, just need a laptop and a good Wi-Fi connection. The reality is still that, let's be clear, for some people, it's not working from home. It's they're at home trying to work during a major crisis with kids around, whom they love, etc. After the excitement of the first 2 weeks, it's tough. And on the other side, you've got big tech companies on the West Coast saying you can work from home indefinitely, or you can move out of California, go wherever you want, etc. Wow, how do they do that? So I'm always a bit skeptical. So how do you see this, Matt? The changes you've had to make, to the way you work yourself, to the way you work with your team, and also another more personal questions for both of you. You built a company from scratch. Building a culture, it's very tough. If I have to build a company from scratch now using Zoom, how do you do that? So just trying to understand these changes, really.
Yeah, so many good nuggets in there. I think I'll start by talking about what we're doing now to kind of maintain culture, and then I think there's an interesting work question in there, which I'll briefly share some thoughts on. But yeah, I mean, transitioning a team to work from home during a crisis, and it's working from home, not remotely, with kids, with other, folks who are socially isolated. Michael mentioned some of the mental health challenges. We've just tried to over communicate as much as we possibly can. I mean, I do everything from videos to the team every week to weekly, hundreds of folks on Zoom to be able to communicate and engage and answer questions, to a CEO Slack channel, to you name it. And then we're constantly also we use a tool called Culture Amp to get feedback in terms of how folks are feeling supported during COVID-19 crisis. We also have added some other tools, like we added a tool called Modern Health that specifically offers a bunch of mental health resources to our team in terms of coaching, therapy sessions, online resources that I think it worked out well during COVID crisis, that we were already planning on rolling that out. But that being rolled out, I think the team is really appreciated. And so we're trying to really take care of our team. The other part is the international component. It's very different to work remotely in Nicaragua or the Philippines, where we have customer support teams, doing that in a way that supports them and has the quality and security that we expect has been a focus for us. So that, it's been a lot, but the team has rallied. I mean, customer support has been the biggest bottleneck because of our growth combined with limited capacity. And our non-customer support teams have done tens of thousands of customer reviews during the last couple of months, tens of thousands, in addition to their day jobs and in addition to working at home during a crisis. And I think it's brought us way closer to our customers, and it's going to make our product and our business much better. And it's also created a huge amount of meaning to the team who wants to help, folks during a crisis and really feel the impact when they're helping customers directly. So that's a lot of the here and now. When you look forward, I tend to think, my personal view, I think that folks have, when talking about, first off, there's no doubt the future of work will change, period. There also, in my view, is a doubt on how much it will change and how much there is around working remotely, especially when there's a mixed model. One person who I really respect on this topic is Sid, who's the CEO of GitHub. And GitHub absolutely espouses how great working remotely is. By the way, they call it working remotely, not working from home. But when Sid was asked the question, well, what happens if it's a mixed model? He goes back completely and says it would be totally different. Like if this interview, if the two of you were in the same room and I was via Zoom, or if there was an exec team meeting where 4 of the 6 people were in the same room, that is a very different scenario. And that's the component where I feel like folks have lost a bit of sight of, is a mixed model is much harder. And I think it is much harder to maintain the kind of culture without having some in-person organic interaction. And so future will change. We're open to it. We'll learn where it will adjust. But I'm less in the euphoria. We're all going to be remote and it's all going to be just perfect and wonderful, because I think that there will be a coming back to reality moment once there's a mixed model and once folks have the relationships that we've built in person over years start to erode in a remote environment.
We have to deal with this mixed model if I take our own activity at PayU, because the reality of the different countries where we operate is completely different, very different levels. It is absolutely not practical to ask for people, to stay indefinitely, at home, when actually home might be 500 kilometers from you actually stay for your job. This is the reality, sometimes, where it's like you have people sharing rooms, sharing, apartments, etc., because of a job, right? Because of the community that they have and so on. And suddenly, they can go through a crisis, but the office is also, where the culture of the company is being built, where, we create the environment for them to be also productive, etc. So we will go through this crisis. They're super resilient, etc. But I think the all working from home will require for us first to adapt it to the specificities, of every economy. From Bogota, to Delhi, very different. Big differences, right? In the way you commute, the way you go to work, etc. The second thing is, look, I think we won't have, a blanket policy for all the offices around the world, especially a blanket policy, model, on a headquarter office in the UK or in the US. It's just not going to work. So it's all about the details of that. And I think we're lucky, right? Because the average age, of our workforce, I mean, these guys are millennials, right? They are completely digital, yet they are the first one to ask for a bit more. So I agree with you, the mixed model, which is for us our reality, is much more tricky. But it is true that the location itself is truly becoming secondary when we look for the best talent. Then truly, suddenly it has really erase, a lot of mental blocks. I think now for us, at least the market for talent is really less about the location on that one. We can be much more flexible. And I say that on both sides, right? Candidates and recruiters, right? So I think that one will give us some flexibility. But it's going to be interesting. It's going to be interesting the next 6 months to see how it comes together for sure. So we see the changes around us, the way we deal with people, the leadership style sometimes evolving also. Some deeper changes that you might see coming in the industry. One for me is around the usage, of cryptocurrencies. One thing, right, is like situation of crisis, right? The world goes down, etc., FX, volatility, and so on and so on. I would have expected, much more adoption, of Bitcoin, for instance. This could have been a moment. This is a moment for e-commerce. This is a moment, for businesses like yours. I don't see the big Bitcoin moment yet. Just wanted to get your views on this one. Is it something really that in this kind of new world we are building, is going to have its own moment, or not yet again?
Conceptually, it makes a huge amount of sense. I think the use case is far from proven at this point. The block building and consensus mechanisms that sit around Bitcoin make it unsuitable as for doing what we do, which is try and move currency, or both of us actually try and do, which is move currency around the world in seconds. I'll be honest, it's hard yards to get the product to actually get to where we want it to be, which is dramatically cheaper and dramatically faster than what you can operate with at the moment. So I think people are continuing to iterate on the use case. I mean, you guys are a founder member of Libra, and those $10 million must have been, which is small money for you, but that's a decent bet on the future of distributed ledger and that stuff working. And I am fascinated to see how that comes through. I don't think I would want to bet against Libra actually making a dramatic impact on this sector in the medium term. But it's very easy to work out the direction of travel. It's much harder to work out when we're going to get to the destination, and in number of years or decades, maybe it's going to be measured in. So yeah, will it? And I don't hold Bitcoin. I've dabbled in my time, and I've held and bought and sold cryptocurrencies for a while. I've experimented using them in remittances. I've talked to various people about building, financial institutions based on crypto. I just don't think it's ready for prime time yet. That would be my sort of my view on it right now. But I do think it will be, massively disruptive. And I think, there are certain things like contracts or ownership rights, particularly sometimes in the developing world, which just lend themselves to a distributed model. In payments, it's hard to see somebody who's actually executing on this and really making it work. Certainly Libra with Facebook behind it, PayU behind it, some other very big players is probably the best chance of success. But we're waiting for the launch in October to see.
I think with crypto, it's really important to break out the medium. Crypto being used as a medium of exchange versus a store of value. And that's something that I didn't see back in 2011 when I was on a panel with Gavin Andreessen, one of the core developers for Bitcoin. There was no Coinbase, there was no anything else. And my gut even at that point was like, this is not going to replace a medium of exchange, but I didn't see it as a good of store of value as gold or a currency. And I think that's what a lot of digital currencies have become. And so, but it is interesting, Laurent. I think a part of the pitch was, hey, global financial crisis, and it'll just pop the value through the roof. You haven't seen that, which is interesting because that was part of what people said it would be. That being said, I think Bitcoin will remain like gold or silver or name your commodity as a store of value. Medium of exchange, I'm less bullish on from a globally transformational standpoint. The one asterisk I'd put on that is Libra and Calibra. I think that we've got the resources that those organizations have. Laurent, you're a member of Libra, obviously, or PayU is. That's one to watch. But outside of that, I haven't seen any where I'm like that has a shot of really transforming a medium of exchange, whether it's disrupting domestic or international payments.
You need, some big players to bring it to mass adoption. I think we've got this with Libra, but we still have a lot of work to do. The reality is at the end of the day, like we've seen, from people taking many years to shift from Western Union to you guys, it's going to take some time also to shift from, I'm using Azimo, I'm using Remitly, I love it, it's super dependable. I mean, your customers, etc. Why would I change? It's going to take some time, right? It's going to take quite some time to nail it, in terms of consumer proposition.
So you can see a player like Facebook just, airdropping stable coins or Libra coins onto their, entire 1.8 billion person user base. And, that could drive adoption pretty quickly. I'm being slightly facetious because it's regulated and, the regulators appear to be, not massively in favor of it. I think the interesting thing about Libra is that it used to be, people running it and probably Facebook were, wanting to own everything. I think now the sort of mood music is much more about partnership, working with other players, building an ecosystem and a community of different, partners who are all using the same technology. And that is something I can get on board with much more easily and, I find much more attractive.
I see, let's see, let's take, we'll discuss this in October again, when it goes, live, when there is something tangible also around this. By then, cryptocurrencies might be the second big move of central banks. I mean, central banks are going wild right now, right? They're pushing so much money. And these are the guys also, look at China, pushing also.
Yeah, it might be Trump's ego that finally gets the US to adopt crypto because he doesn't want to be number two to the Chinese. Wouldn't that be funny?
Just to close our conversation, in this lockdown, people have rediscovered, the joys of cooking, the joy of family, the joy of everything, etc., including reading. And would you have any good advice to share with our massive audience by now of one book to read? What would it be?
There's a book called Educated, and it's by a lady called Tara Westover. And I don't know if you've read it, but if you haven't, you really, really should. It's a real treat. And she grows up in a sort of remote American community of religious fundamentalists who don't believe in education. And she decides that she's going to become educated. It's no surprise that actually the number one thing that our customers remit money for, they tell us, is education. And I think, it's something that we can all, one of the things I've been very humbled by during the course of the crisis is just, how many people I've reached out to that I haven't spoken to for a long time. We're all calling each other, we're all sharing, we're all saying what we're seeing, we're all being very open about, perhaps a little bit more human and open than we normally would be. And it feels like we're kind of educating each other. So yeah, it's a real treat of a book. It's incredibly moving to see what she's been through and where she gets to because of her story. And I think education is always important. So yeah, read it. It's Educated by Tara Westover, and it's fantastic.
One book that maybe is cliche, but maybe not, so I'll still mention it, is The Hard Thing About Hard Things by Ben Horowitz.
Yeah.
I love that book. I love that book. And it's great because it's actually, it reads like a book, but it's a collection of his blogs. You can open up, especially for entrepreneurs listening to this,
Yeah.
you can open it up and pull out the chapter that, it resonates most or the specific challenge you're faced with. And it has such actionable, good advice. And things are hard, I mean, for a lot of entrepreneurs out there. So I find that a very actionable, good, quick read. If you pull out the parts that are most relevant, that's the book I'd recommend.
I finished a few weeks ago. On my side, I'm really spending a lot of time right now. Everything around, yes, climate change, energy transition, sustainability, and then this leads you to question the model of growth. And one good book actually, it's not. I mean, I think it's just a few years old, 3 or 4 years, but the Donut Economics.
Yes.
Written, by these economists from Oxford, Kate Raworth. I don't know if I pronounce it well, but I think it's a good one. It's economics book, right? But more economics, for the 21st century. It's actually, I gave it to my son as well, on this one. I think it's a good complement to all things come together, right? At the end of the day, I had that discussion, climate change, there's a lot of things we can do as individual, should I become vegetarian, vegan, etc., etc. The reality is, okay, that's at the micro level, individual level. There is also the macro level at the economic level, which is, look, the GDP might not be the best indicator at all of our economies and the wealth we create or not. And it means, you need to completely redraw the model of growth that we've lived with, at least our generation. And so, yes, I've never been that interested in economics at school, but that one was much more interesting for the new generation because it has a clear objective. If we don't rethink our model of growth and GDP, we're here for a lot of pain. So I think that one was a good one. On this, gentlemen, I will leave you with a quote of a fantastic author, a Brit, Aldous Huxley, right? I know that the guy really, who wrote A Brave New World, which is, I think, one of the best book ever that any teenager should read. And I was reading it again, a few weeks ago. These pandemics have some positive things, and one single line, in this book. He said, most human beings have an almost infinite capacity for taking things for granted. And here we are. So I think, if we can live with that in this brave new world ahead of us, with our kids, grandkids, etc., we can question everything. But hey, it was fun. Thank you guys for your time. It's great talking to you in person or in video, whatever works. But thanks for your time, guys. Thank you.
Thank you, Laurent.
We will edit everything, we'll send it to you, and we'll see. It's like throwing a bottle, in the open ocean. Let's see who pick it up, right? So
Sounds great.
Fantastic.
Have a good evening, guys.
take care,
Thank
guys.
you.
Bye-bye.
Bye.
Cheers, guys. Bye.